Hi, I'm Peter Rose, founder of Longwood Currency Trading. How much money can you make trading Forex? Man, we see that prompt all over the place, and that's probably one of the most asked questions of folks that are interested in the Forex market. And I think it's a good question. A lot of people say, well, that's just a stupid question. Well, why would it be a stupid question? If you're going to do something, you want to know what the boundaries of that are. You know, if you say, I want to build a swimming pool and I want to be able to swim a mile a day and exercise. Well, that swimming pool, you have to know how big they could build a swimming pool. If the biggest pool that you could fit in your yard is a 6-foot roundy, you're not going to be able to do the exercise and get out of the pool what you wanted to get out. So you should know that. What are the boundaries on how much money you can make in Forex? And basically, there are none. They're conditions. The simple answer to that question is you can make as much money as you want to make. Now, there are certain qualifiers to that. Let me give an example of how far can I drive a car? Well, right away you're going to have two critical things. First of all, how far you're going to drive it. It means you're going to be in that car a long time. So you need to know the rules of the road and safety about that car. You need to know that that car is safe and that you understand how to drive it safely. Because the further that you drive, the more likely you are to run into instances where rules of the road or dangers in the road or whatever are going to take place. So you need to be safe. You know how to mitigate your risk, right? And the second thing to how far can I drive my car is, well, how much gas do I need to get to where I want to get to? Does the tank hold enough gas to get to my destination? And if it doesn't, are there any gas stations along the route? Well, what's that gas based on? What are we talking about? We're talking about metrics. What are the miles per gallon that the car is capable of doing? How good's the quality of the gas? Is your tank safe or is it leaking? Are you going into a high dust environment? Are there any other things that we need to worry about? Are you going to a higher elevation where some of the combustion things are in the car are going to stress more and so use more gas? Those are the metrics of the car. All right, let's go back and look at trading. Who wants to talk about cars? I don't. How much money can you make trading Forex? You can make as much money as you want to make as long as you have two things, and these are qualifiers. That you have good risk management, solid risk management. And number two, that you have a correspondingly large bank that's sized for the trading metrics that you have. For example, if you're a 70-30 trader as opposed to a 60-40 trader, then you probably need less money in your bank because your number of winning trades far exceeds the number of your losing trades. And so therefore, when you puke and make mistakes and stuff, you're not going to lose as much money. So the risk of you going below your initial starting seed capital is low. That's the utilization of metrics in your trading. I know none of that is what you wanted to hear. What you wanted to hear so that you can go out and put a down payment on your ideal Lambo is that you can trade at 200 to 1, 500 to 1 on a $2,000 account and make $15,000 from that. Now, that's true. There are some people that can do that. If you don't have several years of experience, that's not you. And second of all, even the people that are doing that tend to make the $3,000 or $4,000 on the $2,000, and they take that money out and they put it off on the side, and then they repeat that. Because at some point, they realize that the larger the account that you build, the more risk that you have to apply against that in order to compound to make the money that you want to make, that your risk of ruin probability is very high and you lose all your money. Nobody tells you that. These are people that are talking about that are people that ran through a minefield and they got lucky and they got to the other side and they ended up alive. And now they're turning around and telling you, hey, follow me because I know how to run through this minefield. Most of the folks that are out there that have made millions of dollars trading had to lose considerable amounts of money in the beginning through trial and error until they figured out what not to do. Because once, as Jesse Livermore said, the speculator, the more I know what not to do, the more I know what to do. And when I know what to do, I can make a lot of money. So you can learn what not to do either by trial and error, and that'll cost you, well, the average seems to be around 6 to 10, 8 to 10 account blowouts before you finally get it. The other way is to educate yourself in some way so that you mitigate the risk of ruin, which is stated by a resource, a study that was done by a major Forex broker many years ago. 25,000 of their clients, 43 million transactions found that 90% of beginning traders lost 90% of their money in 90 days. Now you have to qualify, well, what's a beginning trader? Some dumbass that just takes $500 and throws it in there and it's gone. But also people that are just getting started and are serious about it, but are listening to this, oh, you can trade in 500 to 1, and this is what you need to do to make all this money, and all that's great until you lose all your money and nobody's there to tell you why you lost all your money. You just got unlucky. So you refund your account, try it again. So you put your $500 in there and you try it again, and you lose that and you put your $500 in there and you try it again. First of all, I'd like to say that if you keep trying it on a $500 account, you're never going to learn. Because first of all, $500 isn't a lot of money, and so you can constantly replace the bank, and you don't have to worry about it. Try losing $50,000. You can't replace that in your bank. And so what are you going to learn from that? That you sort of got an education instead of screwing around. The Forex market is the most practical market for us to trade in. It's a $10 trillion a day market, and 95% of the market is traded by large institutions making orders for their customers. They're not trading against you. You just happen to be in the way with your stupid stops and your Fibonacci analysis and all the rest of the shit that people are telling you to do, and you're over-leveraged at 200 or 500 to 1, and you're shit dust. 5% of that $10 trillion a day market is retail traders. So you take 5% of $10 trillion, and that's our swimming pool. Now, if 90% are not educated correctly and they're going to lose their money, that means that 10% of the people that are there can make normal returns, but the amount of money that they make has to equal the money that's lost by the people who don't know what they're doing, because the Forex market is a pure zero-sum game. There's nothing like in the stock market where you can issue a stock certificate and then you can borrow against it to buy more stock, and the market is all inflated. So if I lose on one stock certificate, somebody gains on 3, or 4 people lose for one person's gain. That's not the way it works. For every loss, there's a matching win, and it doesn't become outside of that. If I win 500, then there's either 500 people that lost 100 each, or one guy that lost 500. But it's zero sum. That order is canceled. That's why you can make as much money as you want to make, as long as you have good risk management and that you have enough experience to have some metrics to be able to say, okay, these are my metrics. This is the size of my gas tank. These are the size of the wheels. This is the power of the engine. This is the distance of the road that I've got to go. And it's going to be gravel road, which is going to take more gas, or it's a super highway road. I'm going to go 100 miles an hour all the way. I'm going to use more gas than if I went 55 miles an hour. Those are your metrics. And if you don't have good risk management, you are doomed to fail. And those risk management and the metrics are in sequential order. Risk management is the first one. If you don't have good risk management, then you can't trade currencies. That's a binary result. I'm sorry, nobody wants to hear that. You think some asshole blowing shit at you about Bollinger Bands and levels and Fibonacci's, and it's Tuesday, and you think that's how the trading is done. You need to get educated and find out, first of all, what trading is all about. Second, you need to get educated about what the Forex market itself is about, and determine whether there's enough money there for you to warrant taking the risk to trade in it. So your risk management is primary. If you don't have that set up, then don't trade, don't risk your money. You may win. You may take your $500 to $3,000, and you may think you're a hero. You could take that $3,000 and run that to maybe $20,000, and you think you're a hero. And you take that $20,000 and oops, you lose it all. And you say, well, that's okay. I only got $500 invested in it. I'll start over again. But you missed the point of the thing. Why are you trading? Are you trading to, like bouncing on a trampoline? You bounce on a trampoline, you have a good time, and then you get off, and that's it? You're in the Forex market to make a lot of money, which means you're in it to keep it, not to play with it. I think a lot of folks get angry with me when they talk with me on the phone because I ask them point blankly, are you wanting to be a hobby trader? Are you wasting my time talking to me because you want to make a couple of $1,000 a year? Or are you serious about your trading and you want to replace your job income or at least significantly impact that job income? The average income in the United States is $63,000. If you could make $6,000 a year, that's significantly impacting your income. If you made $6,000. How tough is it to make $6,000? Well, I don't know. If you've got $2,000, it's going to be pretty tough. But if you've got a correctly sized bank and good risk management guidelines, then the $6,000 is relatively simple to make. So the real question is, how's your risk management and how are the metrics? How do you trade? What's your win-to-loss ratio, for example? And what's the sample size that win-to-loss ratio is based on? Is it based on 10 fucking trades and you think, oh, I'm a 60-40 trader, so I'm okay because I'm 2 up on the 10? Is that the conclusion that you come to? What sample size, Peter, would you recommend that I have? I don't know you. I'm not working with you, so I can't give you that advice. I don't give advice. I give information about trading to educate you on the things that you need to know. So that's stuff you need to go out and figure out. If you want me to help you, I have a course. It's a fast track course. It's a 6-week course, and it starts you out based on understanding risk management first, and then what are these metrics that we're talking about? And how do you use the metrics to set up your trading plan? Because you can't trade Forex without a trading plan. And I have 3 sections in that trading plan, and you can't screw it up. And that trading plan and the metrics lead you to be able to construct condition-based rules where you solve the real problem that you're trying to solve, which is the life cycle of a currency position. That's a rip that I did against my 33-year career as a software engineer, where we dealt with the software development life cycle, which is a complex process of solving really complex problems for software engineers. So in trading, what's the problem? Well, the problem is I want to trade against the Forex market. Well, how do you trade against a $10 trillion a day market where your competitors are 20-year veterans, institutional traders? 95% of your competitors are that. How do you solve that problem? Well, you don't, because it's too complex. So you break the problem down into 3 separate pieces: entry analysis, position management, and exit methodology. It couldn't get any easier than that. And you notice they're in sequential order. So I got to do entry analysis before I have a position to manage, and I got to have a position to manage before I can exit it. I can't go in and exit something I don't have. That's part of the educational principles of learning anything, is you need to learn stuff that are in sequential order. If you have sequential order, then you only have one solution path: entry analysis, position management, and exit methodology. If I didn't have those three problems in sequential order, they were non-sequentially dependent. I've got A, B, and C, and I can order those any way I want. I don't have to go A, B, C. I could do it C, B, A, or B, C, A, or whatever. Well, there's 15 different permutations just three things can have. So if I had three rules, which those phases of the life cycle currency position are, I have a rule for entry analysis, a rule for position management, and a rule for exit methodology, and they're in sequential order. And so I have one solution path. If they weren't in sequential order, I would have 15 solution paths that I have to choose from. Can't do it. If I just had two rules, I'd still have 4 permutations. And if I had 5 rules, some folks have got 5 indicators on their screen. There are 325 different permutations for that. So do you understand the complexity of the thing that you're getting into? If you're not properly prepared, how do you expect to buy that Lambo? How do you expect to replace your job income? How do you expect to do that? How much money can you make trading currencies? You can make as much money as you want to make, as long as you have good risk management and you've got a bank large enough to fulfill the trading metrics that you have so that you're successful in doing that. If you have any questions about this stuff, as I ask in every video, send me an email. I'd be happy to get a conversation going with you. If you're interested in the fast track course, I can tell you about it. I'm not going to try to sell you because I don't teach a lot of people, so I'm not trying to sell a lot of courses because I don't have the time for that. But I'd be happy to talk to you about it so that you could see if you've got the background to be able to solve those problems on your own. Right now, you probably have too much information. That's the problem. So let me help you eliminate some of that information and give you more clarity of the problem that you're trying to solve. And let's see if we can help you solve it on your own. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.